Yo, guys, welcome back. Hope you're all having a fantastic day so far. Hope you're all ready for the weekend. And I want to ask you a few important questions because this is something that affects me time and time again. It's something where you do have to take a step back, take a breather, realize what's important to you before you push forward with progress. So I'm going to ask you guys, do you get data delirium? Are you in a Fibonacci frenzy? Do you get indicator indigestion? Do you have analysis paralysis? That's what we're going to talk about in this episode. It doesn't need to be where you're overloading yourself, guys. You can take a step back. You can simplify it. And that's what we're going to be talking about over this episode and the next few episodes. So thank you, guys. Smash that subscribe button. If you are new to the channel, if you're already a subscriber, don't forget, hit the like button, share it with your friends and help the algorithm. Let's get into the video, guys. Right, okay, guys. So if you're anything like me, you've got different strategies across different time frames for different reasons and different approaches. So sometimes we get analysis paralysis. This is what I mean by analysis paralysis. What I've done is I've put all of my indicators across all of my strategies on one sheet at one time. And you can see you've got the relative strength index here. You've got the stochastic RSI. You've got volume. You've got the parabolic SAR. You've got your three different moving averages. You've got your trend lines. Overload, overload, overload. So take a step back, realize what it is that you're doing, split it apart, and then simplify it. How do you simplify it? Well, what time frame are you using? What strategy are you using? Don't put any additional indicators on other strategies that you're using. So if we were to simplify this chart, we'd be taking off some of the indicators, taking off, and you can see already the chart's starting to look a little bit more realistic. So you can keep taking them off until you've got something that looks a little bit like this. Does this look a little bit more realistic for you guys? Has it made you take a step back? Because this is what you need to do. You need to keep consistency, separate your strategies, separate your rule sets, apply different rules to different strategies to ensure that you don't get analysis paralysis, because you will get analysis paralysis. It happens to the best of us time and time and time again. You have to keep continuing to adjusting with the markets. You have to keep continuing to adjusting with your strategies. You have to keep continuing with your mindset, the psychology behind it. So that's just a quick intro as to what I wanted to show you, how you can simplify things, don't overload things, and don't mix any of your strategies, don't mix any of the narratives. Realize what it is that you want, what it is that you want to achieve, take a step back and move forward. Right, okay, so firstly, what are the causes and how do we overcome them? We'll start with what the causes are. The causes are, guys, you. The causes are me. The causes are our mind, the psychology behind it. There's always something that we're looking at, and then there's always something that we're looking for. So what we're looking at and what we're looking for can be two completely different things. And let me give you an example of that on this Bitcoin chart. So start off on the 15-minute chart, and you can see, first and foremost, identify the trend. You can see we're in a sideways market here. So we're in a sideways market. We'll move up to the 1 hour, sideways, 4 hour. You can start seeing that you've made a series of lower highs and you're in a bit of an uptrend here on the 4 hour, the 6 hour uptrend, 8 hour uptrend. Then you go to the daily, sideways, 3-day, sideways, probably bearish, weekly bearish. Can you see as we progress through the different time frames how you can get a different narrative and a different indicator to give you a different clue? So if we were on the weekly and we're bearish, how long is it going to be before we can take profits, take entries? How long is the trade going to be? Because it's going to be a long time, guys, on the weekly chart. So what time frame works best for you? That's the first step that we're going to take. How much time do you have at the charts? Do you get a couple of hours a day? Have you got a full-time job? What is your strategy? What is your focus? Take a step back and find out what works for you. So, right, okay, so we'll go through an example now. We've got the 1 hour chart. So an example of who would a 1 hour chart work for. So it's going to be someone that's got a couple of hours free a day. They want to be at the charts at, say, 7, 8 o'clock at night. They're going to be consistently at the charts between 7, 8 o'clock at night. They're going to be identifying what works for them and what doesn't work for them, and they're going to be simplifying things. So how do you simplify it? You can't really get more simpler than a simple stochastic RSI and raw price action. So price action is key for me because it's not lagging. It tells us what happens in real time. Just an example on this Bitcoin chart. If you had a break of trend for your rules, you got a break of trend for your rules, and you're coming from an oversold stochastic RSI, and then you're going to be shooting once you've got the break for the previous high, and you're going to have your stops below the previous low. So let's see what happens on this one and whether that works for you. So straight away, you haven't had the break. You've had a bearish move to the downside. You can't take anything. Another bear candle to the upside, followed by a wick to the downside and a retest. And again, bear, bear, and we're waiting for a break. We're waiting for a break. That's going to be our indicator signal. If we hadn't waited for the break, we would be losing now. So we're waiting for the break, and you're waiting for the break, and you're waiting, and you're waiting, and you get the break. So you've got the break, and what would you do now? So you've got your targets. This is if it was your strategy. You've got to go and find out how many times this worked for you. You've got good risk to reward there. And then let's just see what happens on this trade. And it starts moving to the upside. And did it go in profits? Have a look. And you've hit targets there. So you've got a 3.07 risk to reward. Go back, see if that works for you. The key is what works for you, what doesn't work for you. Don't add all your indicators on one chart, on one strategy. Separate them, find out what works for you. You might have a trend reversal as one strategy. You might have a trend continuation, trend following. There's lots of different types of strategies. So make sure you split them between accounts, and back test is the key. So hope you enjoyed the episode, guys. Like I said, if you did like the content and you want more of this content, hit the like button, let the algorithm do its thing, subscribe to the channel, and don't forget those notification bells. Take care of yourself. Enjoy the rest of your day from me.